peacefully. You know, somebody that players can.
Good morning. Everybody hearing me? Mic check.
Good morning, boys.
Got you.
Can hear you.
All right, cool. Okay.
Hey, Kish, I have a question for you real quick.
What's good?
This Zoom just said that this is being transcribed by AI. How's that working out for you?
So it's pretty good. I don't use it really, but when I just started doing it, I would look at the summary. I don't know if I can find one. I downloaded the call from, what was it, Monday? And just give me a second, and it should be in download somewhere here. I think this is it. Record. No, this is the chat. I don't know where it is, but I've seen it before, especially when I'm downloading the calls from Zoom's site to get them uploaded, and they look pretty decent. It's like I don't know if you've ever seen one before. It's like somebody say it's like a third party interpretation of the call. So Kishen started the call. David asked this question. This person did this. It was discussed that these are the main. Yeah, so it's really good.
Interesting. I honestly, yeah. If we can create a database of your calls, I mean, I'm sure someone's smart enough to make that into some AI learning, and we can ask questions when you're not around.
Ooh, that sounds interesting.
Yeah.
Yeah,
I mean, someone has to be able to do that. I'm not. I mean, I will research how to do that if that's the case.
So I should have, well, not all of them because I deleted some calls, but I should have quite a few of them that we could share and then start that project. If you're up for it, let me know.
Yeah. I'll do some research and yeah, we'll figure it out.
All right, cool. So, first things first, I'm bullish NASDAQ, right? We talked about this. This is the range. This slightly darker box here is the range. Premium to discount runs are what we've been expecting. A little bit more aggressive than we would like to see, but nonetheless, discount, we're looking for them to get back above here. Ever since the first day we did this analysis, when we expected this push, all of this to me is just going to get back above and then complete that cycle or that delivery. So you're waiting for a daily candle to close back above Thursday, January 23rd's low, which it fills in. That's what I'm looking for. From the H1 chart, again, pretty standard. This was the week that we framed this, and I kept it on the chart without deleting it for that purpose. This huge gap down here, I think there was two of them, and then this other one, and then that one. They don't mean anything. Those are just the market reacting to whatever the politics is or was at the time. I'm just looking for this here, this order block, to behave when we get above it and come up below and then send us here. This is the breakaway gap. You expect the reactions there. We got reactions there. I'm looking for this to act as a retracement now and then higher. So it's playing longs inside here. Everything else should be pretty standard, pretty straightforward. We have lows, relatively equal lows. Kind of look like daily lows. Those got ran. So then the good book says, if we have liquidity pools and they get ran, you're looking for failed expansions. If this is your low, this is your expansion. First expansion failed here. Your breakaway gap is all the way up here. Second expansion through the low is here. For those who are confused by that logic, it means you're looking for when down candles start closing below previous down candle lows and when they stop. Okay, so close below here, this is an expansion. FEG, first FEG in expansion, close above, you have your key level, you go long. If this candle did not close above the open price of 844, then you're going to buy below the open price of this candle, 846. Here go my entry, along with like 4 other guys, which it was very nice to see. 4 other guys got same entry. Target days relatively equal highs. It's the start of the day, you TP and then you just chill and watch what's going on. So that's pretty much what happened there. Now we have the new H1 candle coming in. So if I had not taken a trade yet, this is how I would frame my day. Expansion here. Also the first FEG. Too many lines. Let's move this one and put it. Oh, sorry, that was a line. Put this line right there. This to this is going to be the pool of liquidity, sell side liquidity. Now the good book says if you have a pool of sell side liquidity at this down candle's low, and we take that pool of liquidity and we don't close, then your key level becomes lowest body in the liquidity pool. There. Anything I'd want to see in terms of bullishness, I'd be focused on that level right there. If they want to sweep this again, it's not against the rules because it's the first candle. But we'll leave that for now. So as of right now, bullish, you're just trying to frame a setup. We have another expansion here. FEG, retracement. I'd be watching this candle's high. We just traded through it. I'd be watching this candle to open for your key level. So from an H1 perspective, hourly charts respecting that level gets me my long to take out the high of the day. Dropping into M5. Pretty standard. It means on M5, order block, level to watch. So retracement to here or inside this big M5 candle. So we don't guess or get scared. Inside this M5 candle, failing to expand right here, says bullishness, and we target the high of the day. Nice and simple.
My God, does that candle have pants?
Which one? This one?
The M5. Yep.
It looks that way. It's a shorts.
It's ungentlemanly.
Buddha with the naked dreams.
So pulling up on equities open now from a purely M5 perspective. Look at the delivery here. Down candle with closing below, failing to close. If it wants to get animated here, then that's probably going to be the push. I would rather the entry here, but again, rules are rules. The expansion is failing here. Let's see what's happening now. 2 minutes until the M5 candle closes. If this is going to expand right here, right now, then the next M5 candle should wick lower and then push away. Nice and simple. If this is going to expand right now. If this is going to expand, you should also be able to frame where you want to see retracements happening in this delivery. Since this is the expansion, there are no FEGs in this, right? Clearly, it's only 2 candles. This didn't close. This high is the one that you're watching. I don't want to make this chart too colorful. But just like that, you have your key level right there for M5. M5 closes above here, makes retracement into this candle's body. Very nice for buys. If this delivery is delayed or well, we have a full minute and it wants to retrace, it should retrace from that candle's high. So we can drop to the M1 and watch what happens there. So this is the new M5 candle. M5, we should wick down and then rally. I don't know what's on my other chart, so I can't just share the next one. But I think going forward, I might be able to share 2 charts at a time, M5, M1. This is where bullishness should step in if this is indeed bullish. You should be able to buy into this M1 candle, and then it should snap back and get above here. I'm using the M5 so you can see why. With respect to this candle, this closing inside, there you go. As far as order of deliveries go, if it wicks that level, and it just did, if this candle does not get above here, then apart from like equities open volatility, there would be no reason to come back because the key level would already be tapped. So it should just explode. All things being equal. Oh, I really want the M1 to be up. So I'm just going to tag the key level and pull it on so we can see it. We're looking for the M5 to close. So we can tag the closing time. If we're about there. Where is the market trading at this point in time? On the blue, when we get to the blue line. Okay, so first scalp opportunity should look something like that below the key level, or don't have to be stingy with the stop, and then a new high. This is M5 derived, so we should be taking our highs from the M5 chart realistically. I'm just eyeballing it. I'm eyeballing everything for this. So due diligence or confluence. But now, like I said, I don't see a reason for this to come back. I don't think there's any news besides the one that just came out. Right. Just to make sure. Hold on, 720. Not surprised, not surprised. The good book says we should have it on, but every now and then I'll show you analysis without the need of perfection. 720 over. Oh, wow, quite ugly stuff. One more minute for the M5 to close. Looking for them to get animated. Now I want this M5 to be really animated, so just move. M5 should have a nice appreciation of things that you know. Right back to the open. Really. Equities open could result in it, stalling a little bit, but as far as pure technicals are concerned, there's nothing left for this to do down there. So just go, go, go. Yeah, definitely need both of the charts up. As of the next call, we'll have both of them. Don't worry.
Yes, morning.
Hey, what's up?
How do you feel about fair value gaps?
Wait, what?
How do you like? Do you take it serious? Stop on so-called fair value gaps.
I don't know if it's on my end. What?
No, it's for everyone.
Okay, I couldn't hear what you were saying. I think your connection. Or type it in the chat if anything. Stop ones without FEGs. And you look for the start, like highs or lows. So let's say this right here was a low, and then this was the stop run. If there is no FEGs here, wait for closes back above the pool of liquidity. Like that, I mean. Mm, 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 mm. 2 minutes, the equity is open. Let there be carnage. Mm, 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 mm. Mm, 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 mm. Mm. I was like, what? Been a while since somebody pulled that trick on me. Mm. Everybody's wondering, where did that come from? Right, here comes equities open, expecting it to be a wild one.
One was looking in the future.
More needs to share the crystal ball.
Mm-hmm. Let's do that.
It's clear. It's clear, big son.
Ants.
Let them do what they want to do. They have 2 minutes.
Let them fulfill Buddha's naked dreams.
One more minute.
We have pants.
Now it's time to play. 2 minutes after Equities open. Let's start seeing exactly what we want to see now. All right. Initial expansion failed. Same logic like we did on the M5. This candle's high. That sets the precedence for direction. So what in case you don't know, what I'm watching is, hey, what's up? What I was going to say is what I'm watching is whether this candle closes above the open right here or not, because that sets the precedence for me buying below the open of the next candle. Buying at the key level before it becomes a key level under the narrative. Nice. So I got my entry right below the level. Logical stop. Now I want to see them go make a new M5 high. M5 high is pretty far away. So this might be my one shot, one kill for the day.
Now, Kish, when you get an entry like that, and since they retraced, do you still have that key level on your chart, and expect them to run to it again, or do you hope, or do you think that they're not going to go back there again?
This one here?
Yeah, where you got your entry. No, where you got your entry.
Here?
So, yeah, do you expect them to run that key level again or no?
It's a tricky question for two reasons. When I'm looking at that, reading left to right, you always check for the narrative, then the creation of the key level, then the confirmation, and it moves like that. So in this case, let's do that. We expanded, it failed. Key levels created right here. We went higher, we came back. So for me, if they did not come back below here, then that would be something like maybe I should watch out for it. Since they did it, if they do it again like this, doesn't matter to me. It's still the level. The level is the level. But what you can do is think about it in the sense of like reaccumulation. Maybe this is just for explanation, right? Maybe they didn't get enough when they came here the first time, so they came back again. So now it's all about how we move away. We should be making new highs because we're in bullish territory. So do we hit and then make new highs? Exhibit A.
Yeah.
Yeah.
Thank you.
All good, all good. M5. M1 is nice here, but everything says M5 should be where the bulk of my focus goes to. Are we wrecking M5 since we want M5 levels? If not, it might be a scalp. M5 highs. It's a pity they're all the way on the left here, which means it's going to be tough and mentally taxing to sit and wait for it because it's all the way over here. But unless you're brand new, when you have targets that are very far away here, at this point in your trading, you must have something that you use to keep you from overthinking. Either it's the size or it's how you frame the risk, but your target is very far and it's so early. You don't want to get into that frame of mind.
And Kish, just so can you talk a little bit on how you manage a trade? So when do you ever like move your stop into profit, or do you just trim and then move to break even? Like, what is your method?
So my personal trading is all about velocity. So some persons like, and this is why I don't talk a lot about RR or the RR approach. I understand what it does and I understand that it's good. However, for me, velocity beats everything. Everything. So when someone would want to get one trade and 100 points, I'm thinking if their trade lasts 5 hours, 6 hours, 11 hours, depending on the type of person, in that same window of time, I could get 10, 20-point trades and I have 200 points. And as long as I'm controlling the risk on how I size in if I take a trade and then I lose, how I size in if I'm on a winning streak, I'm going to beat the RR guys every time. So what I do is I adopt an approach where I use a static lot size. My lot size does not change, but the number of positions I use changes. So take a look at the daily 20 videos, for example. Most times I'm using one lot, and you see me adding. That's just for the videos. If I'm using my own account or I'm trading normally, my lot size are bigger, but it's the same process. So compounding is very faster. If I'm in an environment where it's very, what's that word now? Volatile, I trim aggressively. So let's say most times I'm using a 5 lot and I trim at 4 at 20 points. Sometimes I'll go 20 lots, 3x 20 lots. Then I'll just shave out and leave 5, which means should the trade not pan out the way I want, I'm walking away with my average salary, which is whatever the 5 lots are going to give me. Should the trade stop me out, then I've already trimmed with my aggressive gains. And should everything just magically plays out, then I've compounded the account double digits.
Okay.
But I don't think
Gotcha.
that's for everybody because it requires a level of confidence. You know, sometimes you take a trade, your entry is bad, and you're thinking, oh my God, do I add again? Oh my God, I need to wait for it to move. I don't do that. My process now does not involve any of that overthinking. This, I don't know if it's faith, but this trade idea fits into exactly what we're talking about now. My process says if I stay on M1 in this environment, I'm likely going to do something. Either micromanage, overthink, I don't know, something. All my decisions are going to be made on the M5. All my confirmations are going to be taken from the M5. I'm not trading time here. I don't need to see the M1. I just need to see the reaction and the relationship on M5 because my target is derived from M5. And that might not make a lot of sense to most persons because of how you frame stuff. But think about analysis paralysis. It comes when you have too much information, too much trading models, too much trading ideas, blah, 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 blah. You get it? In an environment where everything you want is clear, the only thing you need to do is protect yourself from risk. If the bulk of my decisions are going to be made on the M5 here, the M1, the M1 is only going to confuse you. Look at this. Every time it wicks lower, you're probably thinking something else. Every time it does I didn't know it was going to be like this, but I understand the approach I took to my analysis requires me to not be there. So the only thing I can do here is protect myself. I can't force the M5 to print any faster. I can't dictate that the M1 makes the M5 beautiful. I can't do anything there. So for that reason, I don't need that input in my decision-making process. Experience will show you that sometimes these are going to play out beautifully, like bam, big push. Sometimes experiences are going to show you how certain minute markers in the M5 makes the delivery more beautiful. But we don't need to go into all that. For now, it's just about keeping your mental capital. For some persons, 20 points, they've already closed the trade, they're already, no problem. But because of the analysis I did, I'm on this chart or this time frame, so you don't have to suffer what the M1 is going to be doing. It's not something that I knew in advance. It's just the process that we did for taking here. M1 is not going to do you any justice in this. And unfortunately, sometimes these are just going to stop you out. Sometimes it's going to be, unfavorable. But you grow to appreciate when to make a decision, how to make a decision, and what to do in the different environments. So for you, should this become uncomfortable because you are looking at M1, then do something. If this stops me out, I feel no pain. M5 is where the narrative is taken from. M5 is what we need in your decision-making process. Trust me.
That's really helpful, actually.
It's one of the uncomfortable parts about trading most persons won't like, but I get it. I get it. I'm not forcing you. Based on where you are, 20 points, again, could be enough. But we're all mature traders here. We take losses, we take wins. We don't trade emotionally. I hope at this point you don't. So get used to the uncomfortable moments.
Yeah, I wish I can say that the emotional trading isn't part of my repertoire, but it is.
We're humans, my friend. We're humans.
Comfortable. It's comfortable.
It is.
What level?
It
What
should
what
be.
what level are you, Tyler? Are you level 3 or level 5?
That wasn't Tyler.
Who was it?
That's Mike.
Mike.
Oh, Mike. Oh, sorry, man. It sounded like Tyler. Sorry, man.
No, you're good.
So in terms of points, I think we should be pulling up on 50 points now. So whether you're comfortable with this or not, you have to manage now. Like, it's a given. You have to manage. We don't know what the M1 is doing here, and we don't care because M5 is where we should be getting whatever we want from.
Another banger, Kish. Thank you.
All good, all good. I don't know how you guys frame your targets here. So that's why I say you have to manage this part. This part, I don't know who's trusting a failure swing. And I'm not going to tell you that one of these are better than the other. I'm just going to tell you that you have to manage here. I don't know how you manage, but you have to manage your trade there.
H1 bag. H1 bag.
H1 back. See, I don't know what's there. I really don't, and it doesn't matter to me. Really doesn't matter to me. Oh, it's a H1 back that we're pulling up on the H1. Is that the same H1 back from all the way over here? Yeah. See, have to manage there. Have to manage, or at least go break even. Now look at the M1. Realistically, you would not be this composed if you were watching. I probably would not be this composed if we were watching all of this. So you have to know what your pitfalls are, where you mess up. This retracement now does not hurt you. You don't, oh my God, what should I do? No, you don't.
Who did they bring in their pants for you?
It's not always warm here, so we got to put our pants on, unlike you Jamaican boys. Soon, I'll be fully Jamaican.
I have no doubt at this point.
he knows all the choice words already, so he'll fit right in.
A proper bumble clot.
Does your bank account look like a mosquito upon a diet?
Oh, jeez. Kish.
Hola.
What are you targeting on the upside?
Well, as usual, it's always 50 points. I've already gotten that. The analysis
Yes.
said we should target M5 highs. These are the only M5 highs here.
Mhm.
Yeah, so this plus the confluence of these here plus the H1, I'm insisting that you guys manage.
You already partialed out.
Same.
But then Kish, another question off topic a bit.
Mhm.
When you remember your old mentorship when you said when you, let us say, you mark a high, and then you said that we refer to the like, let us say, for a series of candles, you said that the candle that closes above the high. Hello.
No, you haven't asked a question. You've only stated a few stuff. I'm waiting for the question.
Yeah. And then over yesterday, you said that we should mark the first candle, like in a series of candles, we should mark the first candle,
Mhm.
the second candle. So, what if, let us say, the candle that closes above like the high is like the second candle?
I don't think I follow. I don't think I'm following the question.
Okay, I don't know. How will I frame it? I don't know if somebody can get me.
I don't know how you frame it. I mean, it's your question. So just help me to understand. Is it something that you're trying to understand? Is it something that it's confusing you? Is it something that I said
Something
that?
something that you said, like, let us say, for example, Kish.
Mhm.
See, like in the series of up candles, like let us say where you have drawn like that bearish order block. You see those up candles up ones, those three.
Right here? Right here? I don't know. I'm lost. I'm confused.
Lol, speak Jamaican, man.
I think he's gone.
Someone marked a little bit to the left.
Where? Oh, over here? Okay. These three up candles?
No, I was just
I'm not sure that's what he was talking about, but
Yeah,
There's
I'm
three.
confused. I don't understand the question. Malheureusement, unfortunately. Let's see what's in the chat. Hey, Terran, man, bro, it's been too long. We communicate every day, but we haven't spoken in a while. Isn't it weird?
Exactly. You're long overdue for a visit here, man.
You know, I've been thinking about it. My brother called me yesterday and asked me if I'm not coming that side. But I'll let you know. I'll let you know for sure.
Busy
Sure,
man.
sure.
Hi Kish,
Hey,
how are you?
I'm good. How are you?
Thank you. I'm good too. So I've been trying to adopt the two bar strategy. I have a I don't know, you would have answered it already, but just to clarify, or if I understood the two bar strategy correctly, the two bar strategy is a reversal pattern, and we are using it only in failed expansions, correct?
Mhm. Correct?
And um, we know that, like, the basic understanding is, say that there are two bars. Let's take this swing low that we have in M5 for an example. Currently, whatever issue, the lowest swing low, right? For example, I'm telling, the entry is basically like, I know price is fractal, right? So say that I say the same fractal in M1, and like say that I'm going to expect a retracement from the M5. I should, like, I'm thinking whether I should like go short that one or wait until the retracement is done and it go up.
So you're asking what do I think about buying to selling and selling to buy? Is that it?
Is it, yeah, is it too much, right? And
It
also, like, sometimes I get confused between time frames, because like, I look at 15 minutes sometimes. 15 minutes looks like sell from the top to bottom, and like 5 minutes looks from bottom to up. The two time frames clash. I didn't at that time, I'm like super confused and don't know which one is the correct, and I lose confidence.
then do nothing. No, I'm serious. I'm serious. You have to remember this. Your rules are not for the market to follow. I think that's where we struggle. Your trading rules are for you to follow. Should the market overlap with whatever it is that you're doing, then you milk it. But every now and then you're going to be faced with something like that where you want to do something, but the markets are saying, no, don't do anything. But you're like, but I need to take a trade. And the market's like, you're going to get hurt. And you're like, I don't want to. You have to get over that. That is the biggest hindrance to everybody. And that's why, like, I try to fix that for everybody in January by giving you something that's so simple, you don't need anybody to explain it to you. Because the moment you see it, the moment you watch it, it just makes sense. So now it's all about, is it there or isn't it there? What if the M1 is too fast? I don't trust it. I think there's a guy in the group that's so mechanical, he trades this only on M1. He's always pointing out H1 2 bar. I don't remember his name right now, but he's always pointing them out. So your trading can just pick a time frame you like. It's not too fast, it's not too slow. M15 is good. I don't really care for the time frame if I'm just being honest, but for the sake of clarity, this is M15. Let's say I'm trying to frame something on the M15. The first thing I'm going to do is find the last time M15 down candle closed below a previous one. Do this with me so we don't get confused. looking at this leg right here, this is the last time, right? Because we read left to right. Ignore what's over here. I know somebody's pointing. Ignore left to right. This is the last time the down candle closed below previous low. This is the expansion.
Yes.
So we know this high being taken gives you direction. Just like that.
So it's not the one below, right?
No, this didn't close. You see, you're missing, you're not following the rules already. The first candle you identify is the last one that closed below a previous low, previous down candle's low. You can't,
Okay.
you can't misinterpret it. No way. Look at the close here.
Got it.
So this is the candle.
Okay.
Now you want to see how we trade to that high. How, that's the important part. The how we trade to that high. Here, look at this. Usually we'd have two candles inside here, and then by the third candle, it's gone. Like once you review this, by the third candle, it's gone. We're closing above. Not in this case. So once this happens, you're thinking, retrace inside here, and then we go higher. It must come from us taking that high. Experience will show you a couple other things, but for now, focus on just this. Call this your order block candidate. Your order block candidate must have a close through the high. Simple. Once we close, identify where your retracement should be. In the most mechanical sense, it's always going to be the open price of the second candle. So let me do this. Once you have the candle, look for the first candle that closed inside it. This. The open price of the second one here is usually where you're going to get your entry. Mechanical traders are going to miss this. That's fine. Why? Wick, body, IRB. We hit that. You want to fib from here to here, 50%. If it rejects 50%, leave this alone. Cool? Now,
Okay.
we go again. If anytime you're trading on order block, classic ICT understanding says you look for the open or the high to get traded to, etc., etc., etc. 90% of the time, the key level for me comes right here. My A+ setup involves my entry right there. In events where you're not getting the A+ setup, this is where your entry is going to form. If the IRB is there, you buy below the open of a candle. Like that's it. Just buy below the open of the candle. Buy below the open of the candle.
Okay.
What
I said to myself from whatever you said is basically after the MSS, the green candle that took the high of the OB candle, and the next candle, right? And then the candle next to it.
You're buying this?
Below that.
Here?
Yeah, that's what I thought is the best way to. I don't know. Obviously, however it prints, right? You adapt to a different one. Like for me, I thought by mechanical, what I'll do is after the MSS, leave the next candle alone and buy below the open of that.
Oh, based on what? If that's something that you've tested and you see a repeating phenomenon, and go for it. If not, then what I do is I use these as key levels. If I was trading the M5, M15, I'd have my key levels and I'd go into M5 and I'd look for my setups around these. So if I drop to the M5, the first thing I'm going to notice is a down candle at this expansion. Second thing I'm looking for, FVGs in the expansion. In particular, the first one. This jumps out to everybody. So I automatically know my entry is going to come here. Or let me not say it like that. I automatically know I'm going to buy this. Whether it stops me out or it's a losing trade is irrelevant. I'm going to buy that. How do I frame risk here? This is the last time we took a candle low, stop loss. I'm buying below the open of this candle, below the low of this candle. So roughly there. That's how I'm going to frame the trade. There are a million things we could talk about here for precision. Failure swings below this candle. We could talk about all that. But that's for as you progress and you start to refine. That's all it does. I told a couple of persons recently, and I'll tell you the same thing.
Sure.
My trading is at the point now where I know what I'm going to do tomorrow, next week, next year, even though I haven't seen the candles. Because I know once I get to the chart, I'm going to look for this. So I'm going to be on the M5 and I'm going to look for this. I'm going to say, okay, order submission range. There's the range. Where's fair value? 50%. Okay. If this is the best possible price in the world that you could get for this range, then I want my entry there. Then I'm going to check, is it 8 o'clock? There. If this level is not clear to me because we're outside here, overnight session is going to be incorporated. That's it. I don't overthink. If I'm on a live call, I'll use purely technical. If I'm not, I'm trading time. It's that simple. So I know I have my key level. I have my time of day. In a perfect world, time meets price and looks beautiful. My entries automatically come in here. If I had not closed my positions, that entry. But what am I going for? New highs. So when did you enter? What's to the left in terms of a high? Here first, here second, here third, and then best case scenario. Why did I keep saying managers were trading into here? Because as Moan so rightly put, this is an H1 bag. 50% of the bag must be sensitive. Have to be sensitive. So, trim. There's another range I might teach you. I don't want to overcomplicate it. You should know it. But yeah, you get this, just manage the trade here. I mean, prepare for the worst, but pray for the best type of thing. The worst is it hits 50% and then it dies and you never get anything that they get tagged BE. The best is we wreck 50% and we go through here. I don't need to be fearful, hopeful, or wondering which of those is going to happen. I got money here. Took it. That's it. That's why I kept saying manage it. Yeah. Manage a trade. Even without that, you don't need TP. This is not a losing trade. But if this comes back now and somebody's going, oh, it didn't hit take profit. I didn't get, where's the thing? Where's it? I didn't get 3.88R because it didn't hit that. Oh no, I'm a failure. Okay. You tell that to yourself. Because TP is a requirement for profitability. It is not in my world. I just need expansions in my favor. That was the biggest part, one of the biggest paradigm shifts. You don't need an entry here to make money. Most times we're trying to get these before the directional confirmation is printed. So you get stopped first and you get another entry. And that is fine. That is fine. But once you can recognize that I lost this because I jumped the gun, then whenever you're going to jump the gun, you cut the risk. Okay, let me go. That. So as far as I'm concerned, this trade is done. For study purposes though, I would encourage you to take a look, revisit the M1. Anything here that was outside the norm, just pay attention to what time it happened. In this case, equities open. A little bit wild. Many persons would have probably thought, let me go short. Buy side, let me go short. No. Narrative trumps everything. Candlesticks come second. All of this is a run on liquidity. How do I know the expansion is failing? Okay. How do I get direction if the expansion is failing? Willingness to close above certain highs. How do I get a confirmation that it's not trying to move, not trying to close above these highs? That's what it means. These things tell you direction. I think. That's my theory. My theory is my understanding shows me direction, and I've already cycled through a million different technical entry patterns, etc., etc., etc. I don't care. I know what I want to see now. If I enter and it stops me out, okay, I wait. If it stops me out again, okay. I will never change my process. Ever, 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 ever. Because it showed me that whether I win a trade, whether I lose a trade, the process repeats. And I'm fine with losing. Imagine taking 100 trades and you lose 7. Big whoop. I lost 7 trades.
Failure.
Some people think that, but yeah, I was tempted to buy this, but I didn't. Very much tempted.
Always say judge yourself over 10 trades, not the one you just took.
No worries, no worries. There's 2 reasons why I wanted to take this trade. I wonder if I'm not going to wonder. I'm just going to say I see the overlapping confluence here. Stop on leg, expansion leg, overlap. Right there. I saw it and I was like, I could scalp that, but then I didn't. But nonetheless, it's been a good morning. Your day can end now, unless you have something else you want to do on the charts. Personally, I'm good. Double digit returns. One of those good days, because I should have sent a screenshot. Should have.
Kish, thanks for the explanation.
Huh?
I said thank you for explaining that. Like,
my pleasure, my pleasure. But
one last question, Kish. I think yesterday or day before yesterday, I just texted like, how do you incorporate the merchant price in the 2-bar strategy? You said you're already incorporating that. Can I use the merchant price for the bias just to start with? Like that will be I'm trying to frame a bias like easily instead of looking at whether loop is closed, efficient or not, all those things. I'm only scalping. I'm looking for only basically 10 to 15 points. So basically, I can use the merchant price in the 1 hour, 15 minute, 5 minute, and just frame 15 minutes, 15 points. That's my goal. In that way, how do you incorporate the merchant price in the 2-bar thing? Like you're already doing it. I just want to get your view on it.
So remember, the merchant price is essentially going to show you where runs on liquidity is taking place. So what you'd want to do is pair that. For example, the merchant price at 10:01. You'd want to pair that with a close above that, tells you direction. And that's how you trade it. So if I was trading merchant price here, I'm buying below the open of the next candle. Understand? But what I want to suggest to you, for example, is the merchant price is about 4 years old. And I've shown you guys by now that everything I've taught over the last 4 years was just to build understanding so you can appreciate what I'm showing you now. The merchant price was derived from this. So when I said, if we don't get above this price, don't think about shorts. Don't think the market is bearish. There's a reason for that. But the 2-bar strategy, let's call it that, it's too simple to mess up. Focus on that for now. But if you're using the merchant price, use it as key levels across time frames and then stock your setups at those key levels.
Okay, Kish. Thanks.
All good, all good. So,
hey, Kish, can I get one more question in real quick before you go?
Definitely.
So, I guess like I'm curious, when you say like you do a double-digit return today, can you kind of just describe the amount of risk that you're putting on percent-wise, strictly for you to get that double-digit percent return?
Okay. So here, I had 2 positions right here. Okay. And those positions were risking about close to 2% each.
Okay.
I added here.
Beauty.
I added here. I trimmed everything from here. I added here, and I trimmed everything here.
And okay, so you had about 8% risk on at one point at max?
No, remember, okay. You see, this is why I said that this portion of risk management is never something I want to.
Yeah, because it's personal, and I get that. I'm just trying to wrap my brain around how I can work into
Replicate.
sizing
Okay.
it.
Let me ask you a question.
Sure.
If you were into the business of getting stabbed, right? Like literally, like let's say you like London, and you're into the business of getting stabbed.
Okay.
When do you think you'd be up for a new stab?
Tomorrow.
Once the old wounds have healed, right? Once the old wounds have healed.
Okay.
I think
When these positions are at break even, accept risk.
Okay, so that's what you're doing though. It's like you're putting the 2% risk on, but as soon as, for example, you're getting like 20 points in your direction, you're break evening those positions to then just stack on more risk.
Correct. So at this point in time, I have about a good amount of risk on, but none of them is being exposed.
Okay, excellent. I see.
That's how you compound, or you will compound losses. Realistically, right?
Yeah, because like, and that's like really like more so my question. Like, we had this conversation yesterday or the day before, but it's like at times like you'll post some of your positions, and my immediate like thought is like, well, damn, like if he's wrong on that position, he's got a 40-point stop on 8 positions. But it's like the reality is, as soon as you're getting your entries, you're basically rushing to get to break even so you can continue to stack in. So even when it flushes against you, you're basically taking 5 BEs.
Right.
Interesting.
And remember, consistency does not mean every single day you will be up 5%. Sometimes you're up 0.5% on a day. Sometimes 1%. Sometimes it's double digits. That gives you leverage for future trades. Tomorrow I can chill. Tomorrow I can trade 0.5%. Tomorrow is Friday. I can trade 0.5% on every single position tomorrow. Tomorrow I don't have to trade a large trading account. Tomorrow I can deposit $500 and flip it. Peace of mind comes when you start protecting what you made. I know I feel like I should have taken that, but nonetheless, it's all good. It's all good. But that's what that is.
But even in like a setup like this morning, like just for like a little bit of clarity here, with that type of scale in, and obviously like you're not having risk exposed once you're break even, but that's like in that single move, you can do 25-30% on your account right there.
Yeah.
Interesting.
So then this is the part that makes all of that make sense. Over the course of your trading career, you will come across a whole lot of strategies. Some that work sometimes, some that are a little bit more giving. It's almost like they don't fail. Okay?
Yeah.
Those are the ones you want to focus on. You want to ignore the fact that everybody's posting a chart, everybody's posting a trade, and focus on the ones that you have personally tested. This is why there are, a few guys that I've shared info and I've said, just go journal and study these things. I could have made video lessons or explainers for those things, but I chose not to, because this is the part where once you get beyond that first PowerPoint, you should be so solid, like so solid. Almost every time you trade, it should be similar to somebody or even ICT. That's where this takes you next. And I don't mean that with any type of ego or anything, but you'll understand exactly what you're looking for. I look at this morning. We took a long, I don't even remember where it was though. It was this early, I know that for sure. Here. We took a long here.
Yep.
Look how many persons got the same long, independent of each other.
Yep.
That says they are looking at what they know what they're looking for. That's what comes next. That's what comes next. I sent up screenshot of my trade. I took it for journaling, but I didn't have the positions shown, thankfully, or David would have flipped. Those were heavy. Those are really heavy. But like I said, throughout the course of our time together, I will always try to share more of these things. If life allows me to do it live on a call, we'll do it live on a call, and just don't suffer in silence. I don't have the bandwidth like every other guru on online to be everywhere, answer everybody. I don't. I have kids, right? I have kids. What I try to do as much as I can is get to everybody. And I try to do these live calls. They're not going to be every day, but they're going to be every week for sure. I can tell you that. Every week I'll do a live call, at least one.
Time to
If
give up
nothing
the
prevents you.
kids.
Yeah.
I said time to give up the kids.
Facts. But
Beautiful kiss. Thank you, brother. Thank you.
all good. So,
Question, please.
hey.
A question, please. I was lost, but I'm back.
Oh, I remember you now.
You were lost,
Yes.
but now you're found.
So my question was, maybe I can draw on this chart.
Sure.
Let's say that you see that high.
Mm-hmm.
Let us say in your previous, like your 2020, I think 2022 videos, you said that once we close above that high, like the candle that closes above that high is the one that is regarded as an order block.
Right.
But yesterday, you said like you see this candle, this last one, this series of three up candles, the first one.
Mm-hmm.
You say that we should reference it.
Mm-hmm.
So which? How do you use them? Like I'm not getting it.
I see. So you're still at that phase. How long have you been trading?
It's been like a year or so.
Okay, I could tell. You're still at that phase where you have too much faith in candlesticks. That's where you are now. So the information is conflicting you because you want this to work, but you want this to work too. That's where you are. There's nothing wrong with that.
Yes.
The clarity you should have is understanding the environments in which PD arrays should fail. There's a difference between analysis versus marking your charts. Marking your chart is marking every single FEG, every single down candle before up move, every single up candle before a down move, have a million lines on your chart, and every time you react to one of those lines, you say, yes, the strategy is working. We've been there.
Sure.
We're humans. We've been there, right? We've been there. There's a difference between analysis, because what happens is analysis tells you that this is how the candles should print. In order to get to that point where you understand this is how it should print, you're not saying that it has to print like that. Your rules are not for the market. You're not saying it must print like this. You're saying this is how it should print in line with a narrative or for me to participate. The narrative here is bullish. As the moment we started the call, we're bullish.
Yes.
So now your process or your mindset should be, if the market is bullish, how does bullish market print on an M5? How does bullish market print on an M1? Well, it prints like this usually around this time. Okay, what time is it? We're approaching equities open. What can equities open do? Introduce volatility. What would you want that volatility to do? Expand in my direction and I make money and everybody's happy. That is literally what we did here. There is no reason to retrace. We do have the M5 order block. It retraced already. Just run. Equities open as a thing to make big wicks. We know this.
Yes.
So we don't take more risk because it's equity opens, because God knows this could have been deeper.
Yes.
We just say this is how it should print to participate. Expansion failed. I had confirmation. I went long here. I shared this trade because this is the one that you should be identifying. Not many persons should be able to see this. And when I say should, I don't mean like I'm better than you or not. No, I mean you don't yet understand how to trade this. This you know.
Yes.
So I will point to the trades that you know. So we could take this. But go through the January calls. There's a whole lot of narrative building around those. And should you not understand anything after you finish the calls, because you have to do some work, then you come back to the calls and we talk about it.
Okay.
But focus a little bit more on either the M5 or the
Yes.
H1. I think that's where you need to be right now. Focus a little bit more on the H1 so you could see
Yes.
the same definitions on the H1. The ranges are larger, so you could trust sustained moves in that direction. And then
Yes.
each day you look at how the market prints towards that level. When does it stop run? When does it not stop run? Where does it go? When does it not want to retrace? All that comes with this. But yeah.
Okay. Thank you.
My pleasure.
Thank you, Kish. Thank you. Happy to be here.
Happy you guys got the trade, you know. Profitability should not be eluding anybody at this point. We've taken probably about 4 weeks of calls, and I think we had only one day where on the call we had all losses. Every other day was arguably cakewalk. Yeah, arguably cakewalk. You should have made money every single day. But it's besides the point. Trade is over. My trading day is also over. Go be human, guys. See you tomorrow.
Thank you, boss.
Thanks a bunch, Kish.
Inspirational.
My pleasure.
Amazing.
Thank you,
Knowledge
Kish.
gain cannot be erased.
Facts.
Show us
Kish,
your
you
bank
be
account the
posting
next
this
time.
video today?
Oh yeah. So you should have 2 YouTube videos coming. Once this is done, I'm gonna start uploading the other one because I already downloaded it. And then once this is done, I will upload it as well. But yeah.
Kish, check your message, yeah?
All good, I will.
All right, thanks.
Cool.
Top G.
I'll check your message too, Tyler.
No, busy day or no?
Light.
I'm gonna message you at some point.
All right, cool.
Ah.
Call is recorded, Zane.